Hey day traders, it is Wednesday, January 15th, and I want to show you a day trading lesson. We had the market today running up to this high, and we started to run into some problems. I want to show you some signs to look for. We made a double on a put trade that I did, trading the lottos, as I like to call them. These are options that expire today. So in the chat room, I was mentioning to everyone, this is a really nice move right in here. Long green candles closing on their high. We instantly challenge the previous day's high. This is the all-time high. Whoops. One tail above candle here and a long red candle. I believe when I was doing my morning video, I said, well, this is a little suspicious to me, and it shows me that there is some resistance. So the market rebounds very quickly and it starts stretching to a new relative high. Tails above body, tail above body, 1, 2, 3, 4 of them. Okay, so we know there are some sellers here, but they're able to overcome that resistance level, and then the bottom gets yanked out right here on this long red candle. It took out 1, 2, 3, 4, 5 bullish candles. It took 25 minutes for the market to grind up to that level, and it was taken away very quickly in one little 5-minute bar. Then the next candle, boom, all the way down to this support level right here. So everything that the market had worked so hard for was easily given back. That is a warning sign. But we had another warning sign. This is my S&P 500 OneOption indicator. You can see how it had a huge spike and then it had a bearish cross in here. Well, that is a warning sign. So if we're long stock and we're day trading, we've got nice profits in those stocks, it tells us, everybody be on high alert, take gains on your stock positions. Let's see if this materializes into anything. We can always get back into the stocks. If not, this could be a bullish divergence too. If the market simply compresses while this falls, then we know that the market wants to go higher. But in this case, we see the indicator dropping and dropping, and now all of a sudden we've got these long tails above body, and now we have this big red candle, which is a warning sign. So right here in the chat room, I start warning all of the members. I said, listen, it's hard to fade a market right now that's been in a bullish trend for the last year. But if I were in a normal market condition, now I would be looking for a double top, or even better, a double top lower high. But you can see we did actually get up above that high. So this is a double top. Tail above body, long red candle. Okay, we're starting to back off. So now we get into a situation where this is a minor little support level where the market wants to rest. These are the critical bars. We get a nice long green bar, but it can't get up to this prior high. And what happens? We have a bearish candle, a long red candle that takes these two candles right out of the scene. If I looked at these three candles on a 15-minute chart, I'd actually see an inverted hammer because it's closing on the low and I'd have a big tail above. That would be very bearish, okay? So now I know that the sellers are in control. Tails above body, look, all along, tails above body. So now I know that the market is going to move lower, and it kind of makes sense that bulls might get squeezed. Bullish speculators have been all over the place, just buying every dip. Well, now we're starting to see some signs of resistance. So in here, I bought some of the lotto puts. Those are the January 328 puts. They were 65 cents out of the money, and they expire today at 3 o'clock Central Time. So I'm going to put in my day trading chat room so that you can see. I want you to know that, yes, I'm actually doing these trades. I'm providing this commentary to members. And so here we go at 11 o'clock. I start talking about the setup here. I was actually short Apple. It had relative weakness. In a normal market, I would be buying puts. That's at about 11 o'clock Central Time, so about 2.5 hours after the open. And so now I'm going to continue to scroll down. I like being short. Everybody, please be careful. Right now, if you've got a lot of long positions, we have a double top forming here that has failed. Right here at 11:31 Central Time, so this is 12:30 Eastern Time. Check the price on time and sales. Make sure that what I'm telling you is true. I bought the January 15, 328 puts. I'd already told members that these would be what I'm buying if I buy puts. So bought the puts at 18 cents. And now I'm just waiting. Here's my rationale. Here's the chart pattern. I see a head and shoulders formation and long tails above body all along the way here. And then I just recently exited the trade. There's another lesson that I provided on trading gaps higher where the opening or the low of the day fails. And I'm doing that while I'm watching my puts. I saw they went to a double and I kind of held off on selling them, saw a little bit more selling, and then I took my profits at 12:08. So that trade lasted about 38 minutes and I made 100% on that trade. Those types of profits are out there. And I know that oftentimes members in the chat room get a little bit anxious because they see a lot of time elapse, maybe an hour elapses before I do a trade. That's because I'm describing the setup that I'm looking for. I'm waiting for everything to set up. I would rather do 1 or 2 trades a day that are extremely high probability and that are extremely profitable instead of doing 10 trades that are all little ones and marginal and hard for everyone to keep up with. In the chat room, I also tend to focus more on the market because when I'm long the market, it tells you that you should be finding stocks that are really strong relative to the market and trading those from the long side. When I'm short, it means you should either be flat and not long those stocks or short weak stocks. Now, given that the market right now has been so dang strong, it's a time for day traders to normally just be very passive and not have long positions on, be in cash, and wait for those opportunities to come up. So that's the day trading lesson. Again, all of these comments are posted in the research room. Do a lot of day trading through the course of the day. If you trade S&P 500 futures, if you trade SPY puts and calls, try my research. It's $29 for the first month. I hope you give it a shot. I'll be posting my swing trading video to members tonight. We're going to be doing some bullish put spreads. And let's take a quick look at the market here. We got some tails under body forming. We have a little bit of a support level forming right in here, so we could get another little bit of a bounce, but I'm expecting to see maybe some more selling and a close near the opening price. Why would you think that, Pete? Well, because we had a doji yesterday, and these intraday ranges are very, very compressed, so you have to put your day trading into context. You have to look at what's going on a longer term basis. If you're a day trader, I think you could really benefit from my commentary and analysis. Thank you. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.